Hey guys, this is Connor from Futures Analytica. Today we're trading the Polarity Automated Trading interface for a scalping type strategy on ES. It is currently 1 minute away from market open and we saw some really good volume in pre-market, which is indicating that our first move is to arm in both directions and move from there. Market did just open, so we armed in both directions. We get a really strong move in the short direction here, however, there was no stacked imbalances, so no trades were triggered. However, right after that, we see a little bit of a rebound, and then we get our first stacked imbalance. That almost instantaneously fills. We capture around almost $700 in alpha from that singular trade. So that was a really good move, arming in both directions there because we were able to capture any possible volatility that was going to continue that trend. So because we're using the Polarity Automated Trading interface, we arm it while we're already in a trade, meaning that when the trade closes, it's going to start looking for imbalances again. So you're able to queue up trades while you're inside trades in the direction that you want. So if you're in a long trade and you want to arm it again for long after that trade closes, you can turn the arm long. Or if you want to go in both directions or the other direction, it doesn't matter. You're able to do that with this system. We had a small movement down in the short direction, but once again, there was no movement that was an imbalance. So we then armed both because we saw that movement downward, but we wanted to have some exposure to the long side. And right after that, we saw that 4 stacked imbalance form, entered instantly, and then a second later, price jumped up and instantly filled us. Really nice $600 of alpha right there. A few seconds later, right after that, since we had the strategy already armed, we get entered once more. This one takes a little bit longer for it to fill. However, it is still really straightforward, and there was no sell side resistance. And we do have the strategy continuing to be armed in the long direction. Because there is such a large amount of volume right now, when we get this small little pullback or resistance level, we decide to arm both directions. We keep the long direction armed. That serves us well because right after we do that, there is another uptick and there are a bunch of stacked imbalances, which enters us and we almost immediately get filled. Our slippage there was pretty bad. However, you kind of can't really avoid that when you're looking at these level of zeros on the left, up and down, and then on the right it's just full imbalances. That's just going to happen, but we got a pretty good fill. We got 1 tick above the highest imbalance. We get filled there and then instantly re-entered simply because we have it armed long already, like that queue up I was talking about. We go once more, however, we do end up losing this trade. After that, we decide to take a step back and look and see what's happening. But after that, it shows you guys how powerful this strategy is for capturing a ton of alpha during periods of volatility. This is less than 5 minutes after market open and we're already up over $3,000. If that shows you guys how powerful this kind of strategy is, if you even were trading on micros, on 1 micro contract, that would have been around $300 of alpha. So as you guys can see, we lost that trade. However, we're still looking for another one. We mark that high-end level there. It's not, we don't consider it a resistance level yet in the long term. However, we are going to keep an eye on it. If price breaks above that resistance level, we're going to arm short or arm long, but only if the bar closes above it. So as you can see, price continues to tick upward, and when that bar closes, we arm it long. But then after that, price does dip below that level, meaning that we're gonna disarm that. When we do this, however, we decide to arm it in both directions. At this point, I'm not totally sure what to do, so that was a little bit of a mistake to do both, so we disarm it in long. So now we're only looking for a short trade. Right after that, we end up getting a really nice 4 short stacked imbalance. So when we're in that trade, we once again queue up a short trade because we don't have a reason not to at this point. There's so much volume, so much price movement that we want to get as many trades as possible. So that trade fills pretty quickly. We have it armed in the short direction still. So as we wait for that, we look to the left there and we're looking at repeating levels of absorption and resistance. We end up getting stopped out there, unfortunately, but we mark that level on the lowest point, or the lower low is what we're talking about in the short term. After we mark that level, I'm looking at this current bar that's forming, and there isn't a lot of price movement. However, delta is extremely negative. It was at negative 79 at one point, so I'm already thinking of arming short a little bit early, just because I really want to capture this alpha. The range that's forming would have formed far below, or at least just a little bit below that level, and I thought that, maybe we should just arm it short there. So we did, and then we ended up getting filled anyway, so it helped us out there. And then we get an atrocious fill on this current trade. As you can see my cursor, I'm a little bit frustrated by that, and then we ended up getting stopped out. Here we're now going to just take a step back and see what's going on. We're going to see if that was the bottom, and if it was, is it now going to enter a range, or is it going to make a V-shaped recovery? V-shaped recoveries are pretty rare these days, especially using range charts. You're going to see a lot of them on minute charts. However, on ranges, you're going to see kind of a zigzag and then a V-shaped recovery because new bars are formed via price. So here, as we're marking these levels, we end up seeing that it goes into a range, which is unfortunate. This range does end up continuing throughout pretty much the next hour. Because so many trades were made so quickly, we just decided to cut there. We made $2,400 within the first 5 minutes of the market open, and I can definitely live with that. If you guys are curious about the software I was using in this video, I'm using the PolarityATI paired with the AnalyticaChart3. This is an order flow analysis software, and the PolarityATI makes it semi-automated. It includes a full strategy guide which breaks down exactly how you decide when to arm, disarm the strategy, and where to mark these resistance levels that I have in here, and pretty much everything I know about trading the strategy. It's all included for free with that package. It completely takes human error out of the equation when trading, and it is the best blend of automated and discretionary systems. But I want to tell you guys about an exciting opportunity that we have now with TopStep. So TopStep Trading is a proprietary trading firm. Essentially what they do is you do an evaluation where you pretty much just trade like you regularly would, but with fake money. So when you trade with that fake money, you have to reach a certain profit target. And if you reach that certain profit target while following the rules, which is essentially don't violate your position sizing rules and don't lose too much money. So if you follow those rules, you automatically are guaranteed funding using their money. So you're able to trade with their capital. You can apply for up to $150,000 of their money, and they make money by taking 20% of your trading profits. You keep 80%, they keep 20% because they supplied you the capital. But this is the best way to create that nest egg to create your own trading account where you keep 100% of your trading profits. This exact model is how I started trading. I went through a proprietary firm, I passed the evaluation, and made enough to start my own trading account. It's definitely the best way to get started in this market, and I can't recommend it enough. Now, here's the exciting part. We're running a limited time promotion with TopStep for first-time users to receive a free evaluation account with the purchase of the PolarityATI. If you purchase the bundle, you would essentially be getting a total of 50% savings across the board if you compared it to buying everything separately. With the purchase of the PolarityATI, you are not only getting a complete trading system, which includes everything you need to know from A to Z, even if this is your first time even hearing about futures trading, but you're also getting a $150,000 TopStep evaluation account. The magic of this is that with this account, you get a free copy of NinjaTrader with the Trader Plus package, free live data, and of course, the ability to trade with no personal risk, as it is not your capital you're risking when trading with TopStep. This package, when purchased through TopStep, is $380, and this does not include any kind of proven trading system and instruction. However, the PolarityATI bundle already includes this, as well as a proven profitable trading system with everything you need to get started. This package is available on our website in the description. This is an as supplies last promotion, so check the pinned comment on this video for updates on whether or not this promotion is still active. If you have already purchased the PolarityATI and you would like to take advantage of this offer, please shoot us an email and we'll get you sorted out with the promotion. As always, thank you guys so much for your support, and I appreciate you watching this video all the way to the end. If you want to see more of this type of content, subscribe and leave a comment on what you want to see next. Thank you so much for all the support, and I'll see you guys next week.